Hello and welcome to Your Daily 5 with myself, Jane Gallina, also known as Airplane Jane. You can reach me on social media at Twitter, Instagram, YouTube, LinkedIn, my website, cjanetrade.com, and always welcome to email me at my email, jane@cjanetrade.com. All right, so the big news of today, January 19th, 2023. Yes, Janet Yellen tells the Congress that we are in debt issuance suspension period. That means they are not allowed to fundraise by issuing debt. This is due to last all the way through June 5th, 2023. And then at that point, we will be officially out of money with the Treasury. So where do we go from here? Where does the market go? Well, dark pool prints, seen a couple at the top on the SPY. But where can we go for potential long trades for those retirement investment accounts? In my opinion, I'm looking at the metals. Should the US dollar go down in value, usually drives commodities up. Metals over the length of time, over history, have always retained value. You think back to people paying with metal coins, gold coins, silver coins. Are we going back to the gold standard or gold-backed currency that we've seen Russia implement with oil? And Saudi Arabia is now saying, okay, well, we're willing to deflect away from the US dollar. All of these components bring me back to metals as a potential safe haven and investment. So right now, looking at GLD, the gold shares ETF, which is predominantly gold as a holding, physical gold and cash. So should gold rise in value, GLD will as well. Right now, we are hanging out up above that 178 mark. And if you look, these green volume histograms on the right here, this depicts buying. So we had some selling just below us, about 177.50. And now we are breaking out up above. On the weekly chart, we can see that we do have a bit of resistance here, roughly around that 180 mark. Should we clear that, we're likely going to be moving up higher. Yes, the RSI is showing a little overbought. However, I find that that tends to show that our momentum is to the upside. We can see that since the middle of October, we have been moving higher. Banks also had the Basel IV implementation that started January 1st, 2023, and will continue through will continue through 2025. That does mean that they do need to have physical assets to back those deposits in their banks. How do they do that? No more paper futures products, physical metals to back those products. So gold has been in high demand, driving it up. Russia saying you can pay in gold, also increasing the demand. The US dollar dropping tends to rise commodity prices. So seeing that gold has been on the upward move pretty consistently since the middle of November. Now, what does that mean for the miners? Well, all of a sudden it becomes a bit more profitable for the miners to mine the gold. So looking at GDX as a compilation of different miners, if you don't want to get into one, we do have some resistance around that $32 mark. It has pulled back just a little bit. However, we are bouncing. If we can break above 32.50, I think we're going to be seeing the 35s fairly quickly. When we look on a weekly chart, you can see that 32.50 resistance held right here. We actually have quite a large inverted head and shoulders, right? If we look at the 32.50 neckline, all the way down here to a baseline, roughly 22.50, and back up. So that's $10. We could easily see this move up to 42.50, a bit of resistance there at 40. For individual names of gold miners, my number one is actually going to be Rio Tinto. We are starting to break out right here. And something else over time that is something to consider for a longer term investor, in my opinion, is going to be dividends. Rio Tinto does have a 14% dividend. So looking at that over time, growth of gold, dividend payouts, this is a potential passive payment system while the value of gold also grows. Up above 77.50, clear skies to continue higher. And 80 will be that real test before we will see a breakout from this consolidation area, roughly 52.50. It did drop just a little bit lower, so 52.52, we'll call it 80. We're looking at 27.50 to the upside. We could easily see that Rio moves up over 100 with gold gaining value. Again, all my opinion, I'm not a financial advisor, so please do your own risk management on these. Newmont Gold is my second choice with a support of 51 over here. We've seen the buying has happened right here. We have our 20 SMA over at 50.40 roughly. Newmont Gold does offer a 4% dividend as well. So a bit of a downward move if you do like Elliott Wave. 1, 2, 3, 4. We're setting up for that fifth leg, likely, in my opinion, up to $60. Final one. Oh, here's Newmont on our weekly. So again, we can see we just need to break out this resistance right here and continue higher. Final one for the miners is going to be Agnico Eagle Mines, right? They do offer a 3.7% dividend. And again, on this larger picture, we see a bit of an inverted head and shoulders again. So looking down roughly at 37.50 up to 55.50, that's $18. So looking for this to continue to move higher up to roughly $73. Here is our weekly viewpoint on Agnico, and we can see 73 would put us at a resistance level right up here where we did see selling in the past. So that is my daily 5. If you guys would like to join me every morning, I am live on YouTube. Airplane Jane is my handle on YouTube. So please come and join me every morning, 8:15, to see my day trading watch list. As always, carpe profit, seize those profits one trade at a time. And thank you for watching your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.